Hello, welcome to the last video about adjusting entries. Today we are going to say about accrued revenue. Accrued revenue is earned but not recorded at the end of the accounting period because cash changes hands after the service is performed or good delivered. Let's look to the example where the company performs consulting services to a customer from December the 1st through January the 31st. The customer agreed to pay $2,000 after the service is performed. On the 1st of December, when the company and customer are agreed to cooperate, we make no entries because there is no business transaction. And at the end of the year, we recognize service revenue for 1 month in amount of $1,000 because the company earns that amount in this year, and accrue accounts receivable account in a debit for $1,000. Accounts receivable is an accrued revenue, which is an asset account. Yes, it is an asset. Actually, it's not revenue. It means that the company earned revenue but not received money yet. Okay. According to the agreement, the company received money on the 1st of February. We make debit entry cash 2000, reduce account receivable of the previous year, and recognize service revenue for the second month, January. But it is the revenue of the next year. Okay, thank you for your attention. Goodbye.